Hey, what's up, everybody? It is Friday. It is September 9th, and we are going to talk a lot about Bitcoin today. It has reached 21,000. We're also going to talk about what the White House may want to do with it. We're also going to talk about some real estate news and some interesting things to do with Amazon and the rental market, as well as where people are building homes that tend to be in not the best area for natural disasters. So, anyway, going to jump right in here with the first story. So, the aforementioned Bitcoin. We have reclaimed 20K. This is a shot down the bottom of what the Bitcoin price was on CoinMarketCap just before I hit stream. So we can see we're already at 21.1. Bitcoin has hit a 2-week high this morning, outperforming most of the other tokens. So you can see right there, we are at 21,157. But this is coming on the heels, which is even crazier to me. The news that the White House put out. I will link the report that they put in the bottom, but it says Bitcoin mining must be greener or the U.S. should ban it. The White House has said that it wants federal agencies and states to make mining cryptocurrencies like Bitcoin more climate friendly or else. So they also went as far as say, according to Decrypt here, that they want to make mining greener, that if the measures don't make mining greener, energy intensive crypto mining, namely Bitcoin, could be banned altogether. Quote, should these measures prove ineffective at reducing impacts, the administration should explore executive actions and Congress might consider legislation to limit or eliminate the use of high intensity consensus mechanisms for crypto asset mining, end quote, the report said. I don't know if there's a correlation between this news late yesterday and the price of Bitcoin now. Who knows? But something worth pointing out and something that's very interesting to me. I want to see where this continues to go. Hopefully they don't ban crypto mining, but we shall see. Moving into some more some positive news. There's a Seattle startup that's helping teens learn about and invest in crypto. They just raised another $2.7 million altogether. Basically, they're saying the area of financial literacy is growing interest for Gen Z. A study found that at the end of September last year, hashtags on TikTok had more than 500 million views. Of FinTalk was the hashtag. Hashtags like cryptocurrency and investing had more than 2 billion and 3.7 billion views, respectively. So this group up in Seattle, they are starting just to help teens learn about crypto. And I think that's obviously cool, whether it's the aforementioned mining, investing, trading, whatever it might be, buying and holding. Who knows? But I think it's a good thing for kids to be exposed to this sort of technology. Speaking of technology, Sky Mavis had hooked up with now Google Cloud to avoid another Ronin hack. We all know Axie Infinity has had quite a few hiccups. Google Cloud will be the an independent enterprise validator for Ronin in a node pool. And basically they announced it to Cointelegraph that the creator Sky Mavis said them and Google Cloud are going to tighten the security of the Ronin blockchain network and pursue its vision of building a rewarding gaming universe. Basically, back in March, the network was breached, suffering losses above $600 million, and they only had 9 validator nodes at the time. At the moment, they have 18, so they doubled that and working to increase that number to 21. So we shall see. Hopefully, there are no more hacks on their chain, but you never know with the way things are nowadays. Looking at a global level, this was a YouGov poll from a month ago, and basically literally a month ago, and saying that how consumers most likely to associate crypto with investing and currency speculation. So you can look the categories: investing, wasting time, making online payments, illegal and illicit activities, protecting against inflation, providing humanitarian assistance, others, or I don't know. A lot of people don't know, but 42% are saying that crypto they associate with investing and or speculating to make money. So I thought that was also pretty positive and sort of ties into where teens, Gen Z could go with this as well. Moving into some real estate, Jeff Bezos backs a firm called Arrived Homes. Now, they've basically continued now moving into short-term rentals, vacation rentals. They've given options to invest in this asset class by offering shares of individual rental properties to retail investors. So they've been in cities like Joshua Tree, Oasis in Nashville, Cardinal in Glendale, Arizona, Ace in Scottsdale, Hammock in Clearwater, Orchard in Blue Ridge, Georgia, and the Point Break in Panama City. Now, the first property, according to this article, was offered to existing investors on the platform, and on yesterday, basically, it was fully funded in 30 minutes. So there's clearly a demand. People want to get out. People want to, take advantage of the short-term rental properties, and this is a great way, supposedly, to have exposure to the short-term rental property market. If you already are in, basically with this group, Arrived Homes and an existing investor with them. HomeLight did a survey. They surveyed real estate agents, and they're saying that what they're looking at now is the amount of people that are buying their primary home versus their secondary home. And what they're seeing, 64% are saying that they're noticing a trend of people buying their second home first, if that makes sense. So maybe it's a condo, maybe it's a small cabin, something that is not going to be a 2,000 to 3,000 square foot primary residence. They're looking at buying that second home because of the cheaper value. Basically, they're saying it's a strategy that enables buyers with budgets whose budgets haven't kept up with recent home prices to still get their foot in the door. They estimate that, the tactic of doing this can help you save an estimated $76,000 on the cost of home. In the Pacific, the savings is even greater, almost over 100 grand more in savings for people who are looking for that second home first. So that was pretty interesting. I thought it was worth sharing. And finally, here with Redfin, they started breaking the data down. They realized that, America's building a lot of homes in disaster prone areas. 55% of homes built today are at fire risk, compared with 14% of homes from 1900 to 1959. More of a shift to the Sun Belt. They're saying recently built homes are also more likely than older homes to face drought, heat, flood risk. But the biggest gap here is fire. Overall, heat and storm are the most common risk, followed by fire, drought, and flood. They're saying adding dense housing and subsidizing public transport in low-risk cities is one solution. Regulators, lenders, and insurers can also work to limit migration to these risky areas, and builders can construct more resilient homes. I don't know if you're going to get people to not migrate to risky areas if that's where the opportunities are, but you can probably get the builders to construct more resilient homes. I don't know if you want your lender or insurer leading you to move to a different part of where you would rather live, but I think the builders could probably step up first, in my opinion. Here's a little chart of it. You can see from the gray is 1900 to 1959, and then the red is just in the last 2 years. So you see the flood, drought, fire, storm, and heat risk. The percentages, so you can see them side by side. The share of existing single-family U.S. homes that face different climate risks by decade built in these disaster-prone areas. So that is the last story I have for today. If you find this content valuable, please consider liking and subscribing to this channel. I do half crypto, half real estate, and love to find times when they intersect. And hopefully they continue to do that more and more and more. So hope you all have a great rest of your Friday. Like and subscribe, like I said, if you don't mind. And I will see you all on the next stream. Have a great Friday.